All right. So the monthly review for Sunday, April 8th till Friday, April 13th. We're going to do this review for our 4 pairs. First pair I pulled up is Gdp Jpy. What I like to do is I go to the weekly and really highlight our week. As you can see, it's a nice bullish week. It's the 5th bullish week in a row for this pair. Let's highlight that quickly. I'll break it down and look for different entries on techniques, where we could have entered, and what kind of pattern we're looking for entry. Daily. So I said the 8th, which is there. Perfect. All right. So you see the week started. A lot of bullish movement midweek. There's a little bit of bearish, but end of the day, it's very bullish. In line with what I thought would turn around earlier. I think it's going to be this bullish. I thought it'd turn around and get some bearish movement a lot earlier. But you can see, I expected a turnaround at the 61.8. But you can see here on the week, when it hit the 61.8, it pulled back a little. But with news, with the Euro GDP news, it made it very bullish, continued, and it turned around at the next level. Right here, which is the 78.6. For those that are new, this is a Fibonacci. The Fibonacci measures the percentage difference of a pullback. So this is a one big impulse move down, impulse late coming down, and we expect a pullback of the Elliot Wave. And there's 3 levels it pulls back to: the 23.6, 38.2, 50%, 61.8, and 78.6. So this is a really big pullback. So this now destroys the Elliott wave. Elliott wave is no longer in play. So we're going to look for a movement. We're going to see some pullback here, but we'll talk about that Sunday. But just a quick heads up, pullback here, probably back to 61.8, and then from there we'll see what happens. For the week, for the 4-hour. For the week, you see on Sunday here, started off some little bit of bullish movement. There's a support level here. If you start your week off on Sunday, first thing you want to do is draw your support, your price level. You would have saw a support level right here because of this touch here, and if I go back further, there's also a touch here and a touch here. Very strong price. So start your week off on Sunday, you would have drew a support line right across here, and as you can see, the market pushed up to the next level, which over here, you can see over here is a very strong price as well. Draw a line there as well. Very strong price down here, okay, which is creating your resistance. So you want to create your zone already. This is your zone, okay, between here and here. And you can see price respected the zone. Broke past a little bit, but couldn't close on the 4-hour and pull back in. But in a 4-hour time frame, it's really hard to see what's happening. So we're going to zoom down to 1 hour. And you can really see this is a very strong zone. So what I like to do is, we're going to presume this never happened yet. You can back up to here, over here. What you could have done is looking for the strong zone. So what I like to do is sometimes grab a box. I'll grab here from the body of here to the wick. Looking for. Drag it across. And I want to make this blue. So I like my resistance and support blue. Make it a little smaller. And then I like to add a 0 to the end. To the other side. There we go. There we go. Make the number smaller. And then the zone comes across. Not far enough. extend it further. And there's your zone. Okay, so a lot of times in these videos, we always draw a line, but the line doesn't really represent the area of price or strength. It's always a zone, right? So a lot of times we use a line just to the visual idea of where the strong price is, but it's usually an area of price is where you're looking for. This is what we call a price zone. That's where you draw a box across and you see this is where the box is really, well, the price really bounces around. So I just fine tune that a little bit there and there. And you can draw these across the screen just because it looks really messy, so I don't do it. I just want to do this to illustrate the very strong zone here. Market opens here, I believe. So the 8th is here. So I'm going to draw a line there. The 1 hour. So you can really see that. So the 8th is here. This is where market opens. I'll make it red, a little thicker. So market opens there. I'll get rid of this box now so we can see better. Okay, market opens there, and you can see the price opens up off the support, pushes off it, it hits a resistance. Okay, so my first entry for this price would probably been here, because you can see already, price came up, struggled a little, but it came to the next area. I would look for entry at this point here. You can see the first bullish candle comes up. It couldn't break this price, but came back down. The next one here, again, pushed up and then pulled back. So this is where I would have looked for my first entry. Okay, but again, on a 1 hour chart, it's very hard to look for entry because you do have a lot of action happening here. It goes up, comes down, might have went up a couple times. So I like to go to the 15-minute and look for more of a confirmation. So you see right here, it came up, it struggled here, a little bit of consolidation, but then when it finally tries to break through last time, pulls back, you see an engulfing candle. This engulfing candle here. This engulfing candle is my indicator or my confirmation that the market's looking to push down. Okay, so pushes down. Again, now I'm looking for a sell now, sell position, and then on this retest of it, right here, I probably would have entered right here. Okay, and I'm going to zone to zone, so zone to zone, and that would have been a nice, at least 70 pips. So my take profit is about 30, 35 pips. What I look for. So you can see there's a nice move to the downside, like this. Hits our support zone and pushes back up, right? So after every move, it pushes back up. There's some consolidation. Let's go back to the hour, see what it looks like. So we're over here. Okay, so this takes several hours. It was 1, 2, 3, 4, 4 hours of trading to catch those 75 pips. But again, you've been out in 30 if you're trading like I do. And then some consolidation, and then a move up. Okay, so again, this is a double bottom pattern. Double bottom here. Double bottom. So you could have looked for another entry. Oops. Another entry over here. Okay, again, hard to tell because on the 1 hour it's very tough. So what I want to do is go to the 15-minute and look for a pattern. You see it again. Another engulfing candle right here. This bullish candle engulfs this candle. So I'm looking for a price reversal to the upside. So if you saw that, you got in, okay, you might have been able to trade this. Okay, so unlike here, there's a retest of this zone. So you're looking for a retest, you might not have missed it. But what you could have saw here is on a 15-minute, okay, I want to delete this so you can see it better. So on a 15-minute, if you're looking for a retest, what happens, it didn't come back down. It just went straight through. But you look to the left, There's a zone here, right here. See the zone? Zone right here, zone right here, right here. Strong price of interest. Well, the price broke through, no retest, but you're looking for a retest here, right? No retest, break through, but after it breaks through, you can look for a retest here, which happens right there, that retest, push through. So two things could have happened, okay? And I want to try this new testing tool and see if I can get it look that way. So we have a strong zone here, price comes down, breaks the zone, does a double bottom. We're looking for engulfing candle, then a retest, and probably back up like this, right? Or we're looking for price to break, punch back down, retest that new support, and push up, right? So two options we're to look for. But again, it's easy to see this when it's all done. But I'm going to try this replay tool. Kind of like it. Let's slow it down. I want to drag it to, we'll see where I started from here. Okay, now we can see how this plays out. Speed it up. Okay, it's a little bit too fast, so slow it back down. How to rewind? I don't know how to rewind, so let's play it again. Play here. So we're looking for, this is the previous week. So this is a week here, and we're looking for some confirmation up here for a reversal. Just really slow it down. See price come up. It's fighting that area, and you see a little push up, and then engulfing candle right there. Even engulfing candle, that's a indication of price reversal. Price comes back up for a retest. Okay, so retest happens, but one thing I understand, this happened in 15, half an hour, 45 minutes, 1 hour. It's almost an hour and a half, hour, 45 minutes for this motion to come down, retest, and then continue. Okay, so it takes a little bit of time. So it's patience is everything. A lot of people, when they get into this, they see up and down, they get worried. They get scared, they get nervous, and we're going the right direction. But then, someone back out here. This zone here, this box here, you can see there's a breakout. So after the breakout, let me add EMA here. Can I change this to add EMA? Well, only continues after. I'm going to show you, you add an EMA in this. There's a breakout here where you can look for another entry. So another entry would have been here on this breakout. Very good entry, very safe entry. Let's continue. And it comes down, and you can see very strong price here. So you might want to get out here already. But continue price bring. He's down. But right here is where your exit would have been completely. Very strong price to interest. Very strong zone. That's where I would have got out. But then you see market comes back up. Let's look for the second movement. I'm pause it for a second. And remember, your zone starts here. This is where your body is, right here. Your body's here, looking where your retest is going to be. The price came down, couldn't break it, pull back. So your retest is going to be around this area here. So you see, it came in for a retest. You had a pending order here. You in for the buy. Could have did that. Again, very early entry. We could wait for this entry coming up. Right here. So we had a retest, engulfing candle. What I would have expected is push back down, look for another test pressure back up. I would look for that. It wouldn't have happened, but You see when it breaks the zone, it broke the zone. We know it's a strong zone. We look for a retest. And boom. So right there we see places entry, price breaks, the retest happens, and you're in. And this is a strong move. If you're looking for 30 pips, you'll be caught that easily. Okay, so I hope that helps. It's over here. And then we continue up to the upside again when it broke the zone again. Oops. Pushed up, broke the zone. What do we do? Look for a retest. This one here doesn't count as a retest, but zone didn't break. Zone didn't break, still playing around here. We're like just still waking up here. I would have waited. Then when it finally broke this area, I would wait for this retest here and get back in. So my next entry would have been here. It's key. People are like, okay, your box is, it's cleared the box. Remember, this box is just a visual cue for myself, right? The market doesn't really see this when they're trading. When you're a trader, you don't really, you could look at this. A lot of algorithms, all the bots out there don't look for this. What catches my attention is the constant wicking up here. This stuff here is what catches my attention in my zone. So I want price to break this zone before I actually look for a retest. So this is the zone I'm looking for right here. Very strong zone. You see lots and lots of wicks. Top of the candles. And then when the retest happens, then it pushes back up and you're on the upside. Strong move. 75 pips. Okay. And then as it goes up, you can look to the left. Where are we? As it comes up, we can look to the left and look for different zones that price is going to bounce off of that creates these movements. Okay, strong price. Let's take a look. So you look to the left, you see strong price up here, right there. Very strong price. I'll make it a different color because I'm using the same color over and over again. Get a purple. Very strong price. You see sharp movements, straight up, straight down. All right, it's very strong movements here. There's the same area where it turns around here. Again, it's probably one here as well. 61.8 on this movement. Again, same levels. These levels all play. This Fibonacci was from a higher time frame, but you can see they all line up to your different levels. Very important to know that. Fibonacci is very important. As you can see, Fibonacci low 50% is one very strong price level where it reversed. 61.8 is another level where it bounces around. Down here, 38.2, a lot of bouncing around here. 23.6, again, a lot of bouncing around. And this price level, I believe I marked it up from the weekly or the daily. I don't remember what it was. That's where we marked it up. So you can really zoom in on a 15-minute. If you're going to really trade, if you're looking for like smaller movements like this, you can use the same time frame. Look to the left. It's way in the past, way over here. So it's over here. You look for these time frames. Over here, this section here, look for price levels here. I want to make them a different color. I'm looking one right there. I'll make this a ugly green. One here. Okay, I'll do this two only. There's one right here as well. I'll put mark that right there. One right here. See over here. Treats it as support. It's resistance. Okay, now go back to our current time where we're looking. You can see here, this is where it bounces around. We're bouncing, bouncing. So when you draw these zones on the 1 hour and 15 minutes, you can really trace where price is going to bounce. If you're a scalper, you see right here, again, engulfing candle, going for a nice sell here. Right? So understanding your candle patterns is very, very important. Right? Yeah, there's engulfing candle here, small buy. Right? You're going for retest, small buy here. So at least 19 pips there to catch. So different ways you can trade these charts as long as you understand the movements and you can almost forecast the movement. Question box. Does the wick in the daily have to fill? Right here. That's what you're looking for. Talk about this wick here. This wick here does not have to fill. The reason why is depends which way the market is moving. So if it pulls back and becomes a downtrend, it's not going to fill this. It only fills it when you're in the same direction of a trend. Like this wick here got filled. It might fill, but I'm looking for a pullback movement. I'm looking for this movement here. Again, we're talking about this Sunday. Looking for a downward movement. But again, with Britain, with news happening in the Britain war right now, the war that attacked this today, it might push the market up higher, right? You can draw, again, I don't want to talk too much about this, but it's just for tomorrow. You draw a nice channel like this, or even a channel this way. Draw a channel this way, like that. And you can see that channel there is where it's bouncing off of. So there's a channel within the channel. You can see this is where it's bouncing off of. So to me, you're not going to see that fill out for a little while. It's going to come back and bounce, at least here, if not break it. Again, this is something we'll discuss tomorrow. Not for this call today. So back to here. So again, when you draw your price levels, you can really see the movement. A lot of people have struggle where to enter, where the market's going to move. Well, if you really want to get really specific, go back to historic pricing. Go back to the left, historic pricing, and you can really get back here somewhere. The more touches there are, the stronger it is, right? So lots of touching here, lot of touching here. So you make these a little thicker. I don't do this anymore, but you can make it a little thicker so you can visually see which are the stronger zones. The more touches there are, the stronger the zone is represented. You go back over, these are all your strong zones where it pushes it up. The strong zone pushes it up. So that's where, when the stronger they are, you're going to treat it as a very strong support or resistance, and that's where you're looking for it not going to break and continue. So when it breaks it as a retest, you're looking for a strong move, like very strong move on these zones. Okay, and the 78.6 we discussed is where it's reversing, and you can see a nice double top. Nice double top here would give you a sign of a reversal right here. Nice double top. And then I see a doji in there somewhere. Yeah, right here. Not full doji, but you can see price open and close very close. Buyer and sellers couldn't really decide which way they're going. So the price open and close pretty similar, and which is significant of price is what the change is going to change soon, and then eventually just falls over. Okay, so confirmations. If you look for confirmations, what I would look for here, again, double top, the doji. You look at you use indicators. Your stochastic would be very high. Yeah, stochastic here is very high. Okay, your RSI would be very high as well. If you look at Bollinger Band, you probably see touching the top. So again, multiple confirmations. See Bollinger Band here. Oh, even better. Here, I'll show you something really quickly. Again, we don't really use this too often, but right here I can see most likely right here, the market, see here, it's really showing you is falling, right? So right from here to here, right here, and right here, yeah, right here. Okay, so right here, and right here to right here. Yeah, another confirmation. I don't use this, but you can use it for confirmation. Right, you have a nice up trout. Oops. So nice incline in price to create a higher high, but on your RSI create a higher low. Right, so that tells you divergence. Divergence is the confirmation of market reversing, and again, it hits double bottom, double top, it reverses. Okay, that's the first pair. Lots of points entry, lots of movement. So hopefully no questions there for the group. If there is, please ask on Facebook or WhatsApp. Let's go to the next pair. UJ. Clear the screen. 1 second. Oops. Clear the screen indicators. All right, let's go back. All right, so USD JPY, lots of interesting movements of this pair. Start the weekly. As we know, I expect on the weekly to have a nice pullback of this leg, just like GDP JPY. This leg, very strong move down, looking for a pullback like this. It's getting there. It's very close to where I want it to hit. Looking for a hit right here at 38.2. That's what I'm looking for. But again, 3 strong weeks. So let's look at this week and look for where we could have entered and what kind of pattern we could have looked for. Enter this. Complete that. So let's circle that week off. I like to make it white so we can see it. Let's break it down to the hour. Oops. So it's our daily. And then we're looking for the 8th. So which is right there is perfect. Okay, we can see it's kind of ranging, right? So like I told you, we expected a pullback to that level. But we're already seeing that the pullback kind of stopped happening. A little bit of consolidation. Look at the daily here. A lot of consolidation is ranging from here to here. And then it tried to break out, but pull back in. That's what I'm seeing. So that's good to know for next week. Let's look at the start of the week. Let's go to 4 hour. The week starts here. We're going to look for, first thing I do when I start the week off, I plot my support and resistance. So zone there. I like to make it orange. What color do you use? Up to you. I like orange. Zone up here like that. I look further. One here. So I'll move this up just so I could get there. And then up here. Okay. The lines, when you draw them out, it's a little annoying, creates a little mess on the screen, but if you're still new, very important to do it so you can see where price is moving. Obviously, this is all done. All this is done already, right? So realistically, when you start the week off, you start off on the 8th, which is here. So you start a week off here. So you wouldn't have seen any of this. All you would have saw was this. Well, you still got to plot your support and resistance. You still got to plot this line, this line, this line. But you don't get it from here. You get it from way back here. This is where you always look to the left, right? This is where you're seeing market price would have been here when you open on Sunday, right here. You would have seen this only. You wouldn't see that was ahead of this. So when you plot your support and resistance, you would have looked over this side and plotted these lines from over here, which relate to going forward what we see over here. So we saw the market already in the previous week. Before Sunday started, it pushed off a zone of resistance. It's pushing down. Well, what does it do when it hits the first zone? It respects it and pushes back up. Right? So very key to know, because you see where it's stopping here. Right here, it stops. I'll be, okay, there's a zone there. So we're going to draw a line there. right? And as your week goes on, you draw more and more zones. You see how the market moves. So you might not have. It's easy to say this now, but I see it. But when you don't see it and it does this, you see price bounces off this zone, it pushes up, respects this zone, pushes back down. So, but that same zone is being used throughout the week. The entire week, the same zone is being used. These two zones, all it's doing, bouncing here. On a 4-hour candle, it looks like it's not a lot, but when you zoom in, you see it's a lot of movement happening. But these zones, you could have drew up from like Sunday already. Even right now, you can go in the market and draw your zones. And then as your week progresses, you can see the price bounce off the zones, and you can look for entry in each zone. Right? You can see this. Just playing around those zones. And for the entire week, it just uses two, almost like, so you use this zone here, this zone here, this zone here. So 4 zones bouncing between. It's ranging between these 4 zones. So you could have found a lot of entry there. But you see the distance between zone to zone, like 75 pips. Zone to zone, you could have cut a few times. But how do you enter is the question. Like, where do you look for entry? So we know this. We know the market's bouncing between zones. So how do we look for entry in this week or last week? So you started here. Let's go to 15-minute. Let's really try to analyze this. Help everyone understand this. So your zones drawn out. Okay. Sunday starts. Okay. Respects the zone. You see it already. Okay. Pushes up to here. On the hour, there's no zone there, but on the 15-minute, there's a zone here. Same zone here is the same zone here. I'll draw a line there. Okay. I'll make it purple. And as your market goes, see, for me, I might have put another trade here. Brush. Put another trade here. Where is it? Right here. The reason why is market comes up, hits the zone, respects it, pushes down. Well, I'm looking for a retest. When it comes back up, it retests it. From here to here, not a lot of pips. Okay, I know the zone here, so you might have been able to scalp this. But for a new trader, it's a bad area to trade. But for myself, I'm going to look for entry here because I knew those retests coming. But it does come down a little bit. You might have caught nice movement here. Again, trickier trade. There is entry there. But this main prime entry would have been here, around this area. I would have put a price, maybe not here, but around this area, I would put a buy, looking for a push up. Because the reason why is over here, this is from previous week. There's nice strong support here. I'm looking for push off of it. So as it wicks, I'm looking for a buy opportunity. So either here or here. And then as it comes up, maybe a little drawback. If you enter here, we have a little bit of drawback. Yeah, 5 pip drawback. If you entered here, you have some drawback as well, probably 2-3 pips. But that's how I would look for entry when the market opened up, is for a reversal. But again, this is very strong. So the evidence here is very strong already. So create a double bottom and look for a move up. Total move this here is about 32 pips. Okay. And along the way, as it moves up, as it breaks area of strength, I look for a retest for another re-entry. Then it finally hits a nice zone. Very messy, not as clean as I'd like it to be. Zone here, pushes it back down, looks for a retest, and then boom, shoots down. Again, you see the double bottom here, off the daily support. So for new traders, I only suggest you don't trade the small movements, but look for a trade on the bigger movements like this. Right here, create a nice double bottom. So as it shoots down, hits this, and pops up, look for a retest. This would have took the 9th to here. Thinking about 4 hours. So less than 1 day, this retest happened. Move strong, we're up. So you can see it, very strong move off of daily. Push this very up. It's probably been news though. So maybe trickier again. But for me, I'm looking for a buy on this retest. And again here, when it pushes through, hits this. Okay, but you're looking for this zone broke, very strong daily broke. It's this daily zone, it broke. We're looking for a retest. So I would have looked for, when it hit this zone, look for a retest. It bounces off to 2 dailies. Look for a movement there. Probably entered from here to here. Maybe not right away. I might have entered on a 3rd candle, maybe 2nd, 3rd candle, and catch that movement going up. And then retested the daily. So strong entry in here. The down movement, and that creates this move here. So you like this because you know these are 2 strong dailies. So when it retests a daily, you know you're looking for a reversal to the downside. Same here. Again, double bottom, pushes up. Okay. So over here, I'm going to look for a retest. I'm going to look for a retest here. Doesn't happen. Continues pushing. And then you can see here when I got trapped. You might have looked for a reversal here. Might have got trapped there. If you did get trapped here and put a sell here, right here, your drawback would have been within 10 pips, 12 pips. So you might have been in this trade already to catch all this. Because I would look for a sell here. But you would have caught. It would have been a drawback for a bit. And then it would have took 4 hours. But it would have reversed and you would have been in profits. So as it comes back down, tested the zone that it broke. Okay, remember it broke the zone. We're looking for a retest. Tests it many hours later. Looking at 6 hours later for this retest. Does a retest and pushes back up. Retests happen all the time. When you break zones like strong dailies, you're looking for a retest. Strong 4 hours, looking for a retest. Always looking for a retest. It hits the retest and pushes back up. And then it breaks a daily again. Look for a retest. Retest, pushes back up. Okay. Several points of entry, lots of area to move. UJ wasn't as clean as I like it to be. Not much structure. It's really wavy. Really wavy. Harder to trade. There's no real trend. So you might have want to stayed away from this pair either way. But I know for myself, I traded this all week. Took some losses, took some wins. But as you look at it, if you start off the week and draw your zones and just trade off the strong zones, it's really good entries, very good way to make money. Strong zone up here, reversal, strong zone down here, reversal. You can see it just ranges back and forth. And finally broke the zone, pushed up, and we're going to look, see it. When market opens, is it going to continue pushing down? I see this pattern happening already. Again, very early in the conversation, but right here, push back up, test the zone, and then fall. That's what I see for next week. But you can see already the patterns bounce off the zones. So you draw the zones early in the week, you can see the patterns start forming, and eventually you can predict or assume a pattern is forming and trade that pattern. Okay. Then we look at gold. Gold's another pair we look at. What's correlated to UJ. Let me clear all this.
Hey Ed, I have a question.
Yep.
So why does the Japanese yen only go? It goes over the 3 decimals, right? Why does it do that compared to like you? Like Euro, USD, and stuff like that. Is it because it's worth more money, or?
Okay, so the reason why that is conversion rate. UCAD, for example, right now it's sitting at 1.26. This is the exchange rate between the current 2 currencies. So this is the price of these 2 versus each other. Right?
Yeah.
If you look at the individual currencies, called index. So in the index pricing, I don't know what the ticker is. I think DYX. No. Anyways, I don't know what the ticker is. But on the index, the US dollar is traded on its own. The Canadian dollar is traded as its own. So each have their own, each individual currency has its own value.
Okay.
And when they're converted, and an exchange becomes this value. So your exchange rate right now is 1.26.
Right.
Yeah, 1.26 is your exchange rate right now. So in the markets, when you go to the bank, you say, I want to change American for Canadian. This is the exchange rate you use. And same thing, Japanese yen. The Japanese yen is worth less than US dollar, right?
Right.
So the Japanese yen is a lot worth a lot less. So when you convert it, it's a bigger decimal number.
Okay.
Yeah. And then you have gold. Gold is basically gold and US dollar. This is what you see in the market in gold for $1,300 an ounce. It's $13.45 an ounce right now on
Okay.
if you're buying gold.
Okay.
Okay.
So would the first and second decimal, would that be the pip, and then the second would be the pipette,
Nope.
or is it
Sorry. In
different with
gold,
gold?
in gold's a little bit different. In gold, I think every penny is a pip. Every penny
Okay.
is a pip. So gold's a lot stronger, moves faster. Pips are sorry. You're right. Every 10 cents is a pip. Every 10 cents is a pip.
Okay.
So their second number is a pipette.
Gotcha.
Okay. So start the week off on gold. I don't trade gold much, but I do talk about it because other people trade gold. You see right now, gold is consolidating on the weekly. So price is really ranging. Okay. Let's go to daily. Oh, what happened there? My box disappeared. I don't know where my box went. It's okay. All I'll do is this. Do this. So the daily, it starts on the 8th, which is right 9th, which is Monday, right there. Okay. So let's take a look on the 4-hour. Right off the bat, you want to again start your zones. Strong zone here. You can see already in the past week, very strong zone here. Okay. It's just only big orange. So right off the bat, you want to draw your zones out. Strong zone up here. One up here. And then one down here. Okay, so right there. Those are my few zones I want to look at. Starting the week off. And let's go to 4-hour or 1 hour. Let's get the week started. You see the week right away. It's bouncing off a zone. Okay. Finally breaks it. There's an hour zone in here. See right here. Nice hour zone. So I'll mark that off. And as you go up through the week, you can just keep marking off your zones so you can see where market's moving to. So here's your first zone. When it pushes back up and breaks this zone, I'm looking for an entry. I know it's gonna come back down, right? But they broke this zone. They broke this zone, so I'm looking for a retest as well. So looking for retest in this area, retest this area. Well, look to the left. Look at the zone here. Nice zone there. The zone up here. Gold has a lot of zones. You can see how it bounces. So I can look for a re-entry or entry either here for a sell or here for a sell. Tricky. You have to look for more than just a zone for confirmation. You're going to need some kind of confirmation that reversal is happening because gold follows technicals really well. So first entry is your doji. I see a nice doji here. Again, on a 1 hour. Nice doji right here. That's signs of a small reversal coming. Reversal coming for the 15-minute. Really see it bounce. Okay. So again, you can see the zones, how it bounces off it. Lots of chance for entry if you want to buy here. You see here, You can clearly see it's struggling here to break. Struggle, break here, struggle, struggle, struggle. So potentially you could look for a buy here and trade it up. That's where the first entry there. When you see a lot of struggle. And then when it comes up, it finally hits a stop. You see that doji coming. Strong area of price. I wouldn't have traded here. I would look for a retest. So I wouldn't enter here. I would wait. And then when it bounces off the daily, pushes back up for the retest, entering there. So I wouldn't enter here. Even though you see the market struggling to come back around, I'd look for a retest for it of it. That retest would have came here, would have came 6 hours later. 6 hours later, right? And don't forget, you don't have to wait for it, right? As it comes down, you just put a pending order up here. Right here for a sell limit, and then trade it down all the way to the next zone. So probably down here, which should have been next 256 pips. Okay. So as it comes down, again, hits nice support here, which is strong daily, pushes back up. So you could look for another buy position on the daily, right? Or a buy position here. So as it comes down here, I keep an eye here. But you can see the candle showed no hesitation. Candles tell you a lot, right? No hesitation here, just broke right through. It did a retest quickly here and came back down. So I would have been looking for here. This is where I've been looking for entry at this daily support here. Delete the wrong one. Delete this. Delete this. So it breaks, again, breaks the resistance, treats as support. Again, lots of wicking here. Shows doji, another doji. Doji is a very good indication of a price reversal. Could have entered there for buy. Couldn't break through. And then as it goes up, you can see it's testing the zones, pushing. Does a retest, pushes again. So if you get to understand these patterns, you can really look for entry. This would have been tricky though. I see a trend line here. It broke like this. It broke this trend line.
Hey Ed.
Yep. Very tricky here.
You said that doji was.
Sorry.
You said that doji was a good indicator that the price is going to go up.
Mm-hmm. No.
Okay.
The doji is an indicator of price direction change, market momentum.
Okay.
Market change. So doji can
is that because?
Sorry, what's that?
Okay, so doji is when it like breaks the trend line and then it kind of goes off of it.
No.
Like bounces it.
No, this is a doji here. This candle. This candle here is a doji.
When it doesn't go anywhere.
How doji forms is, so this is a 15-minute candle. What this means is the opening price and the closing price is exactly the same. It didn't go anywhere.
Okay.
It means buyers and sellers can't decide what price is. It means if this was a buying momentum, well, the buying momentum slowed down, right? So dojis happen a lot.
Yeah.
But it's a good indication. It's a good confirmation you use. But again, you want multiple confirmations before you actually get into the trade. So you won't just trade every doji. You don't trade every doji. You use those confirmations.
Gotcha.
As the market pushes up, you see a lot of indecisive. And gold does this a lot. Gold does a lot of buyers and sellers can't decide what they want to pay. So it slows down. This would have been tricky. A trend line break happened here. But it broke back in and it finally breaks down. But it's, you can see it's very, very tricky here. So when I got caught here, I looked for a reversal, but it didn't reverse. It stayed, continued climbing. So I would have got caught up here. So I don't trade gold. Gold's very tricky. But you can see all the zones. I'll continue drawing zones here and here. These are the zones it's bouncing off of. finally tops up here. It's all news. All the news happening is causing market to push, and eventually starts falling. And on here, on the way down, you're able to catch this on an hour. You see up here strong movement. There's a strong zone up here as well. So you drew a zone up here and a zone up here. You'll be able to catch this reversal. You can see it clearly right here and right here are your two strong zones. It's your first one, which is also the same zone as respecting right now. Right here, respected it and pushed it back down. So if you understand the zones, you can look for entry. When it hits that zone, you know, okay, it can't break this price. Now you can look for entry the opposite direction. Or when it breaks the price, you can look for entry and it's the same direction. That makes sense. Hope that helps. And gold, very, very tricky. Lots of no real structure. It's kind of waving around. Very hard to trade. If you're going to only trade the strong areas of reversals. Here and here. Right now, we're here. Again, we'll talk about this tomorrow or on Sunday. That's tomorrow. I look for how to enter and what entry you're looking for. But in the past, what you should do is on the market opening, draw your zones out. Draw your zones out so you know where price is going to react. You look for entry there. That's gold. Last pair you're going to trade is Euro USD. Delete all this junk. Euro USD. Very nice Elliot Wave I see there. We'll talk about that in a second. You can see, just looking at the weekly right now, the market consolidating. It's a nice consolidation. Nothing really happening. So I'll draw a vertical line like that. Go to my daily. Make sure this is the 8th, which is not. Moves over one, which is here. All right, that's what we're looking at. Okay, draw your zones. Look to the left, draw your zones. On your 1 hour, see a zone here. Okay, a zone down here. A zone right here. Oops, I don't like this box. There we go. Zone right here. So I was looking to the left, strong my zones out. All right, those are daily zones. Feel them. This is where we're going to play in. But again, Euro USD moves really slow. Not a lot of big movements. So let's go to 4 hour. Market opens up. Prices comes up. Breaks the zone on the retest. Could win for a buy. And this 4 hour. Nice buy. Catch easy 30 pips there. But on the 4 hour. Okay. So let's go back a step, go to 1 hour. Really see where market's going. Right off the bat, you see when you zoom in, market opened here, so you would only saw this. Only saw that on a daily. You also notice there's a zone here. So when the market opens, zone's there. You can see price comes down, respects that zone before pushing back up. Right? Creates a nice double bottom from here. And actually, let's create a third bottom. Look for it. So I would enter a double bottom right here. But it came up, we did a third test. I'd be okay. I'll be a little bit of drawback, very little, but wouldn't pushed up for a buy. Very good chance to buy. So when the market opens on the 1 hour, you really clearly see price stopped here, hit support. So when it comes back down to it, I'm looking for a buy opportunity. That's not 1 hour. Let's zoom into the 15-minute to how it looks there. So again, you can clearly see it. Price came, hits some kind of price level here. I'm looking for the same price level here to enter. Same price level to enter there. For a buy, would have a little bit of drawback, if even, and then pushes right up. So your entry would have been here. Your buy would have been here. It would have been a positive, which would have been, might have been out already. It might take profit, but if he didn't, it would have came back down, retested this that third time, and pushed back up. And whatever your take profit is from that point, from this point, would be made. Total move would have been 68 pips, 69 pips. So your target was 30 pips. You might have got out at this resistance. You could have traded that easily. Then looking at price as it breaks, you see a nice strong zone here, a 15-minute zone, another 15-minute zone here. Well, as it breaks it, you're looking for a retest. Retest here, hits it, buy. You catch all this if you wanted to. Very nice market to trade. You see, I like Euro USD. It doesn't move as fast, but a lot of method to trade. And then another thing I see how it reverses. This is a great pattern to show everybody. Elliot Wave. Elliot Wave pattern is direction, a trend up, consolidation, and trend down. Well, look at this. You follow YLB, who trades the Elliot Wave. You trade the Elliot Wave here. Your first push starts here. So the market swings lows, swing high to swing low. The bottom, now swing low to swing high. Swing low here to swing here, right? But look at this. One push is here. Your first push, a pullback. Second push, a pullback. And then your third push. Well, look, you're looking for a reversal to the downside now. Well, look at this. It's head and shoulders pattern here. Head and shoulders pattern here. And then it starts to the downside. Oops. Which reverses the market to the downside, which is going this way. So a lot of ways to enter, a lot of patterns to see. We saw this. As you draw your zones across, you're going to trade it each leg, each push, all the way up, or you trade its reversal. Reversal E to C, you see head and shoulders pattern here. This zone, is the same zone here. So as it hits it, when it hits this, and on the retest comes up, it breaks it, I'm looking for head and shoulders pattern. So when it does break back down, I'm looking for entry right here. Right here, looking for entry. Oops. Looking for a sell right here. This head and shoulders pattern was created. That's what I'm looking for. You catch a sell right there. You're looking at, if you're looking for 30 pips, you're out already. So the total move down was 75 pips. Lots of patterns. These happen all the time. Bounce off zones. I saw this head and shoulders pattern right away when it's developing. And then if I knew that, I can enter on it on the shoulder and trade it to the downside. All right, it's 11:17. This is a 1-hour session. Hope everyone understands this analysis, how to enter, what to look for. Use a testing tool. Testing tool is really cool. Go back to the market, highlight the previous week, draw your price zones out, and run the tool like this. And you can put on fast. You can at least watch it and see how it bounces. So as it goes, you're watching it. You don't notice it doesn't go right to the zone right away. It gradually gets there, finally hits it, and then bounces back up, right? So use this tool. So your week starts off, creates his first bottom, pushes up. A second bottom, you're in for a buy. Third bottom, and off it goes. See that? But again, had it happen, it doesn't happen right away. It takes a few, 3 or 4 candles for it to get there. Excuse me. You see 3 or 4 candles. When it gets to the bottom, it hits it. You're in for a buy. Now you can understand that's pushing up. Okay. I'm going to stop the recording.